Good morning, everyone. Thanks very much for joining us today on today's webinar. Um, we'll be starting just in a couple of minutes, but for anyone that doesn't know me, my name is Matt D'Souza. I'm the Head of Strategic Partnerships here at FE fundinfo. I've worked in the industry for over 15 years and for FE fundinfo for over 10 years now, predominantly with our advisor space. So working with over 4,000 firms across the UK and Ireland in the past 10 years, and gathering feedback throughout that time that hopefully will come through into today's session. So once again, thanks so much for joining us. We're excited to have you here as we're looking to discuss the major trends that are shaping the wealth management and financial advice industry throughout 2025. So over the next 30 minutes, I'll be walking you through key insights and opportunities and the tools that can help you succeed in the ever-changing industry. There is a question box at the top right-hand corner of your screen. So please do feel free to submit any questions that you have throughout today's session. We'll do our best and we'll make sure that these are answered and followed up after today's session. And so today we'll aim to go through a few different key topics, 5 in total. The growing role of AI, why holistic financial planning is becoming the new norm, the shifts in investor preferences, the impact of evolving client demographics, and then the continued rise of digital transformation. And so if we kickstart with a high-level overview of the 5 key trends driving change in wealth management this year. So a great starting point is AI. AI is no longer a future concept. It's here and it's actively transforming how we work, from automating day-to-day tasks to enabling smarter decision making. Holistic financial planning means that clients now expect advisors to understand their life goals, values, and their emotions. It's not just their financial needs anymore. And this requires a shift towards more comprehensive services that help bring those conversations to life. With this shift comes a change in investor preferences. So ESG focus and LTAFs are gaining significant traction as clients seek more purpose-driven investments and long-term financial planning. And the demographic of our advisors' client books are also changing. So millennials, Gen Z are becoming a larger part of the client base, bringing new expectations with them and for digital engagement and personalized experiences. And so really the technology is reshaping the way that advisors interact with our end clients and manage their operations. And so as we move through this presentation, we'll do a deeper dive into each of these trends and explore how you can leverage them to enhance your practice. So let's get started with AI, one of the most disruptive forces in the industry today. Whether you've heard about this through the recent news of DeepSeek and you've seen the impact in your client's portfolio, or you've been playing around with ChatGPT on the side. If we think about tasks like compliance, document management, and reporting, AI tools can handle these processes efficiently. They save time, reduce risk, and reduce errors. For example, chatbots, whether we're aware of them or not, chatbots can assist with routine client queries and are already within our industry or within alternative industries. Machine learning is taking that to another level by using algorithms that can automate risk assessments and changing the way that we then build and construct portfolios. And we're finding as well, as part of that trend, that tools are starting to introduce more agentic AI. So that would be AI designed to act autonomously or with minimal human input, which is expediting efficiencies and gains. It almost becomes another employee within your business. Now, we know at the moment only a small number of financial advice firms are implementing this type of AI, but it is widely believed that there'll be a transformation in bridging the advice gap that will likely be led by the introduction of more agentic AI as we go on. So outside of that, you've also then got another strand in terms of predictive analytics that allows advisors to identify market trends and opportunities earlier than ever before. You've got tools that are powered by AI and can analyze vast amounts of data, generating more personalized recommendations for clients and ensuring smarter decision making at the back end. And then it's about how we use that AI to help us connect with our end clients in a different way. And so AI is now helping us deliver hyper personalized communications by analyzing our clients' behavior and their preferences. For instance, you can use AI to create tailored financial plans or send real time updates on portfolio performance in a more engaging manner than potentially has been there before. And so, as a kind of bigger summary on this, AI adaptation is happening faster than probably any of us could have predicted. The fact that 92% of financial advisors have already begun implementing AI in some capacity, whether, as we say, that's touching on ChatGPT or maybe exploring what Copilot's added into 365 recently. This is also mirrored by our end clients and their experiences touching AI within their day-to-day. So 83% of those aged between 25 to 34 are stated to feel comfortable using AI-assisted financial advice if it made services more affordable. Now, in contrast to that, that is compared to, say, just 33% of over 55s, which is our leading demographic within financial advice. So it's quite a stark difference and something that we will address more as we come into holistic financial planning and also talk about how we're bridging that intergenerational wealth gap. But most importantly with AI as well, there's a few important considerations. So we know in the marketplace that there are 50 to 100 AI tool providers who have entered the race, and they will find challenges through getting access to the data that they need to be able to perform the tasks at their best and deliver best outcomes. And they'll likely be reliant on better integration throughout the market. So the good news for advisors on that is that there'll be many options, but advisors will need to be mindful that AI is only as powerful as the data it's trained on. High quality structured data sets are essential for accurate insights. So this is where we feel advisors need to invest, not just in the technology, but ensuring that their data is clean and comprehensive. In addition to that, consumer trust is going to remain a barrier. So whilst AI can assist you in transactional tasks, things such as topping up an ISA by £1,000, most clients are still hesitant to fully trust AI for major financial decisions. So this would be things like investing their full allowance in their ISA or what to do with their growing pension fund. And I'm not sure we'll have, well, maybe we will have significant life events that will expedite this in a similar way to COVID changed everyone's perception or the way that they integrated technology like Teams and Zoom into their families and their lifestyles. So something to be aware of. But as we move forward, the firms that adopt AI strategically will gain a significant edge. If we just need to be mindful of just remembering that technology is just a tool. It's how you use it that makes that difference. So moving forward to holistic financial planning. Over the past 5 years, demand for holistic advice services have grown by 60%. So in 2018, only 29% of clients sought after comprehensive planning. By 2023, that number had grown to 47%. So it's quite a substantial growth. And this shift reflects a broader change in client expectations. People no longer want advisors who simply just manage their investments. They're looking for partners who understand their life goals, values, and emotional needs. And so some key elements of holistic planning include systems that integrate budgeting, retirement planning, tax optimization, and legacy planning. And clients are increasingly valuing advisors who can provide guidance during major life transitions, like legacy or family planning. So I suppose, why does this matter? The research shows that clients who feel their advisor understands their personal values are significantly more satisfied and therefore more likely to remain loyal. So this presents a huge opportunity for advisors willing to expand their scope of services and in turn, a greater likelihood of securing intergenerational wealth transfers. If we move past that now and we talk a little bit more about some of the other trends that are changing with this holistic financial planning. So if we look now at investor preferences and how these change. So we've seen a significant introduction in ESG and LTAF trends coming into the market. So if we talk about these preferences and particular focus on LTAFs, because it's probably more dominant in 2025 and in the news articles at the moment. So we would say a remarkable 78% of UK and US asset managers with a European presence are considering launching LTAFs within the next 3 years. Many of them already have, and some people, those at the front of the pack are already starting to communicate that through. Groups like Schroders, for example. And this reflects a strong shift towards long-term illiquid investments driven by a growing demand for stable and sustainable returns. And most importantly, I suppose, high yields at the back end, as we're all searching for them within the market. So the UK's defined pension contributions industry, it expects LTAFs to become a core part of their investment portfolios going forward. The shift will allow clients to access previously inaccessible long-term assets, aligning with their portfolios and their long-term financial goals. So there'll be a shift in terms of how advisors then start to bring these into conversations and the type of reporting requirements that might come along with them. The FCA has introduced rules to broaden access to LTAFs for retail investors and defined contribution pension schemes alongside that. And with this regulatory backing, it not only builds trust, but it also ensures that investment opportunities are then going to be accessible and secure. And that need will become more dominant within the market as we go throughout the year. So as LTAFs grow, we believe it's an exciting opportunity there for advisors to offer clients a diversification in these long-term solutions. But if we now examine how this ties in with ESG investing. So over the past couple of years, ESG investments continue to grow in popularity. And they also bring significant challenges for advisors. So here's what we see that's happening. The FCA is consulting on extending sustainability disclosure requirements, and you'll see SDR get mentioned in more articles as we go throughout the year. These labels will then be passed on to portfolio management. And this will enhance transparency and standardization in sustainable investments. So this should in turn ensure that clients understand how their portfolios align with ESG goals. Model portfolio service providers, discretionary fund managers face challenges in adhering to these SDR challenges, regulation challenges. They'll be conducting due diligence comparable to that asset managers will be doing. So it's becoming increasingly more complex and adding a bit more pressure on compliance teams to make sure they're meeting up to the regulatory standards. Acknowledging these challenges, the FCA has then moved out deadlines for firms to comply with the new ESG naming. So that's moved out to April 2025. And the extension provides firms with valuable time to align their operations, ensure adherence to the new requirements. And the key part here is just how do we stay ahead of the evolving regulations? That part is going to be critical going into this year. Partnering with providers who specialize in navigating regulatory frameworks can help ensure that compliance while streamlining your advisory process is met and that regulation stays at the forefront as well of everything you're thinking. So taking that into our evolving client demographic, one of the most transformative forces reshaping wealth management today is the evolving demographic landscape. So with younger generations becoming more financially active and the largest intergenerational wealth transfer in history underway, the way financial advisors engage with their end clients must adapt to meet these shifting demands. First, we say we're witnessing unprecedented wealth transfer. It's an estimated 63 trillion expected to pass from the baby boomers to younger generations by 2045, with approximately 39 trillion going directly to heirs. So this shift creates a critical opportunity for advisors. Younger generations inheriting wealth will have different priorities and different expectations than their predecessors, especially in terms of engagement. So advisors are now focusing on how they continue to build trust or pass that trust on with these heirs early on in the process. So they're ensuring that wealth remains under their management after the transfer. And I suppose strategies to consider, including offering different education on investment principles, estate planning, family legacy discussions. We've seen that come more into the fray over the past few years, and how people tackle that gap and start to build that trust from a much earlier stage than they might have done historically. Alongside that, whilst there remains clear demand for financial advice, these generations don't just want generic advice. They expect things that are more tailored, and there's more tailored guidance available now in the market, and that aligns more to their values and speaks more to their life goals. And so many younger investors prioritize things like sustainable investments, flexibility in financial planning, things that are now options available to them within the wider market. And therefore that expectation feeds back to their financial advisors and helps in building that trust. And so from their tools, they'll start to expect things that provide clear and actionable insights as well. A great example of this would be challenger banks like Monzo. They last year released a collaboration with BlackRock, where they introduced investment services into the mix. And within 2 days of announcing that partnership, 200,000 customers had joined that waiting list. So it's clear to see the demand. But on the same point, advisors need to adapt by incorporating robust data analytics and leveraging platforms and tools that allow them to generate and surface hyper-personalized financial plans. This personalized approach will ensure that you can continue to meet unique needs of the younger audience and the younger demographic, whilst maintaining those long-term relationships. And finally on that, the way that the younger audience then engages, they are far more versed with digital engagement. So nearly 80% of young adults now turn to social media platforms for financial advice. And this highlights a massive shift, and we appreciate from speaking with clients, there is a lot of good and bad within the industry there. So the big shift really is just how people are engaging with financial services, and that digital engagement is a strong change. So it then comes down to things like convenience and accessibility that are real drivers here. Advisors must embrace this trend, because integrating digital tools into their practice just becomes a must. It includes offering things like mobile friendly platforms or utilizing social media channels. And we've seen more advisors do that so successfully in recent years, and grow great followings behind it. So this could be through things like educational content or just providing more seamless communication through apps and video calls. But digital engagement then doesn't just become an option, it's essential to staying relevant and maintaining that trust. Bearing in mind that we also need to keep a relative eye on the way that we engage in those channels, and that we need to be able to still meet our regulatory obligations, and still remember that, from a compliance background, that you'll need to be able to keep record, and have a simple way to pull that data out to continue to provide better advice. Okay. So as we move forward, keeping that in mind, that adapting to these trends isn't just about meeting the expectations, about positioning yourself really as the go-to advisor for that next generation. Okay. And this leads us nicely into digital transformation in wealth management. So if we finally touch upon, how digital transformation is reshaping financial advice, the financial services industry is increasingly reliant on that technology to deliver this seamless client experience and improve internal workflows. So it's not just a trend, it's something that's of a necessity for firms. And 90% of firms are reporting higher revenue growth and improved client experiences as a direct result of integrating this technology. It's a really powerful statistic. And it's something that shows that firms leveraging technology to automate workflows, personalized services, creating streamlined processes are reaping the benefits. Okay. In addition to that, 92% of financial advisors say that they would leave their firm if technology hinders their productivity. So it also changes a shift in terms of those financial advisors where you're looking to be able to grow your business as well. It highlights an important consideration there. Your team's ability to be able to perform at its best depends upon the tools that you provide. And inefficient or outdated technology not only slows the process, but it can also create frustration and turnover. So to continue to attract the top talent, it's critical to invest in these systems. And the final point we make around that, or that we've generated from speaking with our client bank, is that 44% of advisors have already switched firms due to inefficient tech systems. We know that another point that we're not going through today is consolidation within the marketplace. And whether this has been justified by a retiring audience or just demonstrating that the cost of neglecting technology goes beyond the operational inefficiencies, it directly impacts your ability to retain advisors and the end clients that they bring with them. So when systems become cumbersome or fail to meet the expectations of today's audience in a digital first world, both clients and employees may look elsewhere for a better client experience. So the key messaging is integrated solutions enhance client satisfaction and retention, but they also improve your operational efficiency and potentially your own retention within the business and your own growth plans. Okay. So I suppose the big question around this is, how do we fit into all of this as a technology provider? And for over 30 years now, FE Fundinfo has been at the heart of investment product and creating a world where financial data is the strongest asset for growth. We're helping investment professionals through asset management world, but also 4,200 financial advice firms. And we help them stay competitive. Whilst our aim is to be able to bolster them to deliver the best client outcomes. So what we've worked towards is bringing together an integrated platform where we facilitate seamless data solutions that reduce operational costs, manage risk and compliance, but we capitalize on that asset growth, serving a bridge between the asset management world and the rest of the financial advice industry with the wealth management world. Okay, so this is where we've brought in Nexus. It's designed specifically to meet the growing needs of our partners. So our end mission is to empower financial advisors with comprehensive, integrated services that clients can then engage with. It simplifies financial planning and streamlines that investment management process. Okay. So how we do this is we're helping our client advisor base by creating and analyzing personalized financial plans. We're helping our clients make informed decisions with confidence, while advisors can remain proactive. Customized advice comes into this as well, and it's based all upon a foundation of real-time performance, whilst including things like future scenarios. When we automate that client data collection at the back end as well, the communication and investment reporting that we can bring to life can significantly reduce advisor time that's been spent on this historically. So we're helping alleviate manual tasks and paperwork throughout the process. The tool sets allows our teams and our users to be able to focus more valuably on activities that are going to generate more of that trust with your end client. So things like relationship building or just focusing on that strategic financial planning element. And so our platform brings together disparate systems that have been standalone over time and data sources, and it gathers them all into one place so that you can have a seamless interface, making that advice process from client engagement to the end reporting more efficient and easier for you to be able to manage. Across that whole stream, we manage risk and we ensure that reports are always accurate and compliant by pulling them from up-to-date sources, verified data sources, and storing all the due diligence on client advice to make sure that you have a track record of meeting your regulatory needs. So this overall will reduce the risk of errors and compliance breaches, and it should give our advisor base more peace of mind. And that in turn gives your end client more peace of mind. And finally, I suppose the Nexus platform really just better connects that financial advice community to that wider investment management industry. So overall, we can give our clients a powerful foundation to make confident financial decisions that are focused on improved client outcomes. So in summary of today, whether we're talking about AI adoption, holistic planning, ESG priorities, evolving demographics, and that digital transformation piece, we are looking to help shape how that redefining wealth management space comes to life and how you can deal with the challenges that this is bringing. So we remain right at the heart of it, uniquely positioned to help financial advisors navigate the ever-changing landscape. As advisors, the challenge we feel is to adapt to these changes while continuing to deliver exceptional value to your end clients. By embracing the technology, expanding your services and staying aligned with your clients' expectations, you can really position yourself for longer term success. A lot of these tool sets are already built into our systems, and what we'd recommend today is if these parts are interesting and if you're keen to understand how we're partnering with a lot of groups on this process and to help you with your own journey, please do reach out to any of our team. We have a strong structure of account managers, business development managers through in our company, and we'd love to be able to speak more and share more about what this looks like in practice. If you're keen to be able to look over the fence and see, how does this all come together? How does it work in principle? Please feel free to use our QR codes and sign up to one of our demo days. Come and see how it looks like in action. And finally, if you want to be able to reach out more and discuss any of these topics in more detail and sort of finalize, where your thoughts are, other challenges that might be faced within the industry, and see how that's shared in our community as well, please do connect with me. I'd be happy to be able to pick up conversations on this at any point. You'll likely hear a lot more from us in the near future. But if there's nothing further, we want to just thank you again for joining us today. We hope you found this session insightful and helpful. And if you do have any questions, we look forward to you reaching out to us. So thanks very much, guys. Enjoy the rest of your week, and I hope your client engagements go well.